Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Wednesday pre-market prep. Spencer Israel, Joel Elconin, Dennis Dick with you this morning. Big show today. So we've got between yesterday's after-hour session and this morning's pre-market session, how many earnings? 354 earnings reports between yesterday afternoon and this morning. So a lot to get to. We're going to talk about as many of them as we can. We're going to talk Kodak as well. We're going to talk crypto and Bitcoin with our guest at 8:35. That's Michael Sonnenshein. He's the managing director at Grayscale Investments. They're the firm behind GBTC and the Ethereum trust. And then at 9, we'll be joined by the CEO and founder of Hyliion, Thomas Healy. And he's going to talk to us about what they're doing with electric trucks and how it's different from Nikola and Tesla. So a lot going on today's show. Don't forget to hit the like button and subscribe. We appreciate that always. I'll throw it to Joel now. Joel, what is happening here in the overnight session?
Good morning, Spencer. A bunch of good earnings reports here. Have the S&Ps up 6.25 handles. Snuck under Tuesday's low by a little bit. That's 08. We went to 04.25. Got a nice rebound. Just hanging here at 23.20, just under that. Been looking at that for the past hour and a half or so, kind of staying in a tight range. So we'll keep an eye on, yesterday's high is way up at 46.75. So maybe if they say some good things on Congress, we'll get there. But really in an area with a lot of room to move between 20 and 30, and then also down to 32.10. We have crude in the green here by 42 cents. Crude's having a good day. We'll take a look here at the crude market. Gold continues its march higher, up 680 after that super volatile day, working its way to 2,000. Maybe we got to get the the gold 2,000 cap on. Silver in the in the green by 13 cents at 24.43, and Bitcoin up $100 here at 11,135. So over the $11,000 level. Triple D, just a ton of earnings reports.
Yeah.
I hope you didn't get yourself in any trouble because there's some big rips up there.
Yeah, some good earnings.
Yeah.
I'd like to start with the Kodak story because there's so much to this. And we'll be on earnings for a while, don't worry. And throw your tickers. With 199 stocks reporting, we can't possibly talk about them all in the show. So send us the ones you want us to focus on. We'll get to at least 10 of them. But Kodak, this story is just unbelievable. The backstory, the Trump pump yesterday. We've got the whole scoop on this thing now. Yesterday, we obviously were talking on the show. It said, who knew about this? Because it had a big pop on Monday ahead of the news that obviously came out Tuesday morning. We found out. So we found out the scoop here. Spencer Israel, can you enlighten us?
Yeah, so as it turns out, and hat tip to some people on Twitter who alerted you to this, Dennis. But
Cole with Benzinga, he actually found a person, this Eric person, who actually found this story, and another person found this story as well. And give us the details on this. And this is from Monday. This
is from Monday. The RochesterFirst.com, which is obviously a local news outlet in Rochester, New York, where Kodak is based out of. They published a scoop. They had a scoop on Monday, and I'll pull up the archived webpage. The reason this webpage is archived is because they took their scoop down. They took the article down.
Somebody told them to take it down.
But that's what this little gray thing is up here. This is an archived page. So here's the headline: Kodak, U.S. government to unveil a new manufacturing initiative in response to COVID. You can see, I'll scroll down, published. There you go. 11:56 a.m. Eastern time, July 27th. That was Monday. Okay. And you look up the chart of Kodak, and that's when it
started popping. It started going slowly up right then. So this is just a little local newspaper that obviously got a scoop.
Yep.
And then the article was taken down, so it wasn't up for very long. So, but people, there's some smart traders on Twitter. There's some smart traders that all of a sudden saw this. And this Eric person, shout out to him, who's on Twitter. He just goes by Eric, so I don't know his full name. He was tweeting it out around 5 p.m. Somebody must have alerted him to it, that there's going to be a big announcement to KODK, and he said this is going to go to the moon. So there was some traders that obviously realized that, hey, there was a story that was up. It was taken down very quickly, but some people saw it, and those were the traders who were buying it on Monday. So if they were doing that, that's fine. I mean, that was public information, at least for a moment in time, so even though they took it down. So you could have bought it on the afternoon on Friday, and I don't know if there was a lot of people talking about it, but obviously there was a couple people on Twitter talking about it, and you would have made a lot of money. So it pays to look through, but how do you know to look for it? Needle in a haystack.
What I suspect, and this is pure speculation, but I suspect that Rochester First.com, whatever the name of the outlet is called, Rochester First is the website. I suspect they're probably pressured by Kodak to take it down. That's pure speculation. I don't know anything for sure. That's just my guess, is that they were pressured by the company Kodak to take the scoop down. They had the scoop for whatever reason.
Yeah,
it took it down, but it was up there long enough for someone to notice.
Yep, a few people noticed, and that's why the stock was up 25% on Monday. So it wasn't people with an inside scoop; it was people who actually got a sniff of this local, article. Maybe people who read actually the Rochester First regularly, and and they obviously were able to make some money off of it. So congratulations, that's just a huge scoop. And Eric, great call there by you on Twitter, because I can see your message from 5 p.m. saying this is going to go to the moon. So great call.
Yeah, continuing higher this morning.
Well, and there's more to that, Joel. So last night, so obviously Kodak cooled off. Last night it gets the Trump pump. So during the conference, during Trump's press conference last night, he actually went out of his way to congratulate Kodak on their new contract, or obviously with the government there. So he went out of the way to mention Kodak one more time, and that's why it's up another 68% here today. It was doing nothing until they got the Trump pump. So we'll call it the Trump pump, and that's what this was, and that's what this is trading off of KODK now. So it's not new news. It was just Trump giving it some love.
Trading right at the highs of the pre-market session, folks. Right here, right now, we're trading at 1345, 1346, as you can see, just top by my cursor here, just trading at the highs of the pre-market session. What's a target on this thing? I mean, when things get going like this, the momentum, use your pre-market high wherever that turns out to be. And we are trading above that monthly high. Remember in January when they went crypto?
Yeah, blockchain. They went blockchain.
Yeah, they went blockchain. Yeah. And that's when they got the 1328.
That's a good number.
Yeah. That's the only reference point I can give you on that. Going farther out on the monthlies, I mean, what would be I'll just give you the next monthly high, and a possibility, 1480. That was your March of 217 high. So there you go.
I don't know where it tops out. I just think when we look at this thing 6 months from now, it's under $5. That's my call. So we'll come back to it 6 months from now. You can archive this if you want, and we'll see. So I don't know the path for it to get there. That's why I'm not shorting, because like I said yesterday on the show, I think it could go anywhere. I said it could go up to 18, it could go back down, to $5, $6. It started giving it back. Trump gives it some love. Typically, the circus is in town right now, just like Harlan Pine would say, I sell my peanuts when the circus is in town, this type of stuff. Meaning, if I was in it, I'd be ringing the register. That's just my opinion, because I don't know where it tops out. Or at least bringing up some stops. Don't let the thing get away from you. And, even yesterday it goes up to 11 off, in the first hour, and then it leaked down to 8. Well, you'd given back a lot of the gains. You didn't know it was going to get another Trump bump here, but that's what's happened overnight. I don't think Trump's going to talk about this stock every single day. So I think the Trump bump here is a gift.
All right, let's do some earnings here. We got a lot to get to, and I'm just going to rip through some names. If there's anyone you want us to talk about in particular, drop it in the chat, but we're going to try to cover the big ones. Let's just start with Shopify here. Yeah. SHOP out this morning, and what a report. They blew away the estimates on the earnings, and they blew away the estimates on the sales. Sales was a huge beat, $714 million in sales versus a $500 million estimate there. Although they did say, interestingly enough, that they're not going to give guidance for the rest of the year. Doesn't matter, though. Blew away the expectations for the quarter.
What and are they making money on the bottom line or still losing money?
Yep, they're making money. Adjusted EPS $1.05. They're making money.
Still making money. Wow, making a buck there too. So that's got to be their biggest earnings. They've never made $1 before, have they?
Let's see.
They don't usually make anything.
They have been profitable. Yes,
they have been profitable.
They've been profitable.
So it's fairly reasonably profitable. I mean, obviously, we know, the environment for them, being the lockdown, obviously was very good for Shopify. So not surprising that they blew it away, but they really blew it away. So they had a high bar and they got over the high bar. That's good. One number for me, 1074. Is that your number, Joel?
1074.98. That was your all-time high. You sold off pretty hard off that previously.
Have we been through it in the pre-market? Oh, we're talking
yeah, we
out
have.
there
We
in
did.
the pre-market.
We did. Yeah. Here.
Yeah, well, you're kind of right there, though, Joel, in the pre-market. If I'm looking at that top left chart there,
yep,
multiple highs right at that high.
Exactly, and it hit it twice, and it got through
that's
it.
Concerning.
So it's not. It's
got to get through there. If you are bullish and you're coming in and buying at 1057, you want to see it get up and get through that 1075 and start getting over 1100, because this could be one of those cases, especially when it coincides with the all-time high and twice bumps up there in the pre-market and doesn't get through it. That's concerning. So great report. A lot of greatness has been priced into this stock, though. So I'd want to see it get through 1074 if I was going to, start to really get on the bull train here again. I'm concerned that it could fail there.
I want to welcome Sean Keen, first time listening live. He usually catch it around 11 a.m. on Spotify. This is awesome. Maybe a new routine as teaching high school from home. He'll have plenty of time in front of the computer. Go AMD. A range. We'll just go range because this is a expensive stock. 1074, 1078.05. That was on the initial report. Ran up. Almost hit it again. So there's your range. Where to buy this thing on a pullback? I'll leave that to you, crafty day traders at Robinhood. That'd be a tough one.
Speaking of AMD, we should go there next. Just a beast of a report.
Beast mode.
EPS beat 18 cents versus 16 cents. Sales beat 1.93 billion versus 1.86 billion. They gave Q3 sales guidance. That was above the estimates. They gave gross margin guidance. That was good. They're selling a lot of their Ryzen chips. It's all good news for AMD pretty much.
When you're in favor, and I tweeted this out last night, but stocks that are in favor stay in favor a long time. Stocks that are out of favor stay out of favor a long time. What is a long time? It can be months, it can be years. And right now, everybody is jumping on, like Fast Money last night. We had Dan, we had Tim. We love Tim. Comes on our show. I'm on the other side of their trade, though, because they're like, Intel's valuation relative to AMD is a lot cheaper. It's always been a lot cheaper relative to AMD, though. AMD is the story. AMD is hot. Intel's the one that just came out and said, look, our new chip's not coming out till 2023. So that's really been the catalyst to carry AMD. That's a long time, Joel. So you look at here and you think, okay, there's a lot of traders that are saying, I would buy Intel and short AMD. And, you look at the spread and it's completely blown out, because if we go just back to 4 days ago, AMD and Intel were the same price. They were both $60. Now AMD is 75 and Intel is 49. You think, how can I go wrong? I'll buy Intel short AMD. It's 26 points. The spread has just blew out. I'll tell you how you can go wrong, because once these pairs start going in one direction, they start blowing out. They catch a lot of people. There's a lot of people who maybe have that on the wrong way getting hurt there too. I don't see any real support in Intel until $45. So I know the CEO bought some stock last night. That was out there, so that's helping. Intel was down, and then it kind of went up a little bit on that. I actually traded that a little bit last night. I'm already out of it, though, so I can already freely talk about it. But I don't think the vote of confidence of buying 400,000 shares is enough here for Intel to just turn the story around right away. I do think Intel could eventually see that $45 level. I think I would be a buyer there just in the long term. But as for shorting AMD, one rule, the golden rule for me, don't short stocks making new all-time highs, because there's nothing to lean on. There's no way to control that risk. I think AMD could be a $100 stock here eventually. Is the valuation make sense relative to Intel? No, but look at this. The people who are using valuation when they're comparing Tesla to General Motors, and they were saying, well, this makes no sense. A Tesla can be worth as much as General Motors. Now look at where those people are. So when you're using valuation in a market that doesn't give a crap about valuation, it's very tricky to trade off of that. This market hasn't cared about bottom line profits for a long time. It didn't just start with COVID. It started a long time ago. This market cares about top line growth. They care about revenue growth, and they care about a story. And AMD, to come in here and start shorting AMD, I'd be scared. I'd be scared to say that this is just going to come right in. I wouldn't be surprised if AMD is a $100 stock eventually. So I'd be a buyer of pullbacks on AMD, and Intel. I like the 45 support, but I'm not pairing them up and shorting AMD and buying Intel. Sorry, I love you, Tim. I love you, Dan. I'm just taking the opposite side of your trade.
Intel, I mean, just look at this just long term, though. I mean, well, this chart's probably not going to do it justice, but, it was $70 and 65, $70 in 2002, 2001, before the not financial crisis, the tech crisis. But we're just going to be interested in AMD. I would just be hawking the 76 area. Someone is. We've come up just shy of 76 a few times.
And Joel's talking to the day traders.
Yeah, I would look at that as potential resistance because you see it on several.
From a day trading perspective.
That's it. 576, 580. Also, I just want to tell you guys real quickly here, I don't know what color this is, cyan and magenta here, but those colors represent the pre-market and the after hours trading. So when you're looking at that, and then
you did a purple for me.
I did. Yeah. Gary helped me. Shout out to Gary. He's I
call that purple. I don't call it magenta. It's kind of purple.
Well,
I guess it's not a pure purple.
Very patient man. But anyways, 76. Someone wants to sell some stock at 76, and that's what you're doing right now. Up 767.
I think AMD, just like I said, Shopify eventually is going to be $1,000 stock. I said that when it was down at 600, even though I sold my stock. I think AMD is going to be $100 stock. So I'm not chasing it up 11% here today, but on pullbacks, I'd be a buyer AMD. That's just, I'm making a call. I think eventually we're going to see $100 stock here in AMD, and I think we're going to see it in the next year. I think we're probably going to see maybe even by the end of the year.
So in the next 12 months, fair to say?
Yeah.
Okay.
I'll say I think AMD is $100 by the end of the year, next 5 months.
Okay.
We'll put the over on. We'll see where we are December 31st if it's ever kissed up over 100. But I think AMD is going higher.
All right.
But not chasing. That's the story is buy the dip, not buy the rip. We're up 11% here today. I mean, it could go to 80, 83. So, I mean, if you want to chase, I guess you chase, but I always wait for a dip. So, it's maybe you get a cool off period. Maybe the market pulls down. Maybe you get back down to 71, 72, and then maybe you strike, but where you can control the risk a little bit more. I hate buying gap ups, but I'd love to own the stock.
All right, let's move on. Let's do Starbucks here. I'm just moving through the list without any rhyme or reason. Starbucks beat on their earnings yesterday after the close. They lost less money than analysts were expecting. They lost 46 cents per share. They were expected to lose 59 cents per share. Sales also beat 4.22 versus $4.06 billion. They are also raising the low end of their earnings per share guidance for the year from 55 cents to 83 cents. Which is in line. Still, with the ranges they gave is in line with the estimate, but they're raising the bottom end of the floor end of their guidance. Comps for the year are going to be down anywhere between 12% and 17% on a year-over-year basis. So some good things there, and some bad things there. I mean, they're coming in above estimates, which is good, but I mean, they're still getting hit pretty hard by this crisis.
Boy, oh boy, $80. That's really all I can say about this stock. You did blast there after hours. I think they gave a warning on this day, 82. You went to 80. That was the high on that day. Sold off back to the scene of the crime. We'll see if we get back up over 80. If not, you got some room between 80 and 82. Looks like you're finding a little bit of intraday or pre-market support here at the 78.50 area.
I have no comment on Starbucks. I mean, $80, you get up there and it's got some resistance ahead. But there's been a lot of stocks that, and we're going to get to those too, CAR, LB, that are now rallying because their earnings weren't that bad. And also, and this is a different story than Starbucks, but just cutting expenses. I mean, L Brands is in desperation mode here, and they obviously came out with some guidance as well overnight. They weren't on the list, but they came out and they were talking about how they're trying to cut costs and trying to obviously figure out a plan forward here. CAR did come out with earnings. The earnings were an absolute disaster, which was expected. They're talking about cutting or they've gotten rid of 100,000 cars. They're talking about, they canceled an order for another 175,000 cars. So everybody's excited with car here because they're cutting expenses like crazy. But I mean, it's a rental car company. Let's think about what we're buying here. So the car earnings were okay relative to expectations. I got them in front of me. They lost $5.60. They were supposed to lose $5.84. So I guess that's a beat, even though you lose $5.60 in the quarter, but obviously nobody was renting cars. Somehow their revenue, I guess the revenue was very low too, the estimate, 760 million versus 719 million. So their guide down from the previous quarter, which must have been substantial. They got over their very, 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 very low bar.
So Avis said they removed over $1 billion in expenses during the quarter. So they saved over $1 billion. And in that same theme, Dennis, that you just hinted at, L Brands, not earnings, but they came out and said that they're cutting 15% of their corporate workforce, and that's going to save them around $400 million annually. So two stocks that have been really beat up hard, both saying, look at us, we're cutting costs.
Deserved to be beat up hard. And if you're coming in and buying car now at $30, first of all, Uber and Lyft were eating their lunch before COVID ever came around. I mean, yeah, car had a nice pop up there in early January, February. I don't even remember what that was all about. But, if we look overall, Avis budget, topped out in 2014 at $69. There's a reason it was down at $30 in 2019. And that was because Lyft and Uber. People aren't, renting cars as much when they can just quickly get an Uber or a Lyft. It's so much more convenient. So that is still going to be an issue for them going forward. Lyft and Uber are not going away. Yes, COVID will get solved, and yes, there will be a vaccine, and maybe they don't have as much competition from Hertz, but people are citing, oh yeah, Hertz is off the board. Hertz is not stopping operations. They're not in full sell, and close up shop. They're just going through a bankruptcy. They will emerge from bankruptcy and still be a car company. So you will still have competition from Hertz. Sorry to say, Avis Budget shareholders, CAR. I think it's had an incredible run from the lows. Could it continue? Sure. I mean, it can do whatever it wants. This market's silly, to reward, just the epic, to reward them going over the low bar that they set. I wouldn't want to own the stock. It was $10 back in May. I think it was deserved. It's back to 30. I think it's a gift for the longs. I don't know where it's going. I just don't see the reason for me to come in and be a budget shareholder when there's so much competition and COVID is still out there. So
$30.
Sorry, I don't like the stock.
I think we got that. You got that across to us very well, Dennis. Good. Bumping your head up against $30. The initial spike was the 31.50, and there's definitely buyer's remorse after that. You pull back to the $30 area. All what Dennis set aside here from a long-term perspective, hold $30. You're 37 cents above it, up 277. I have no idea what the short interest in this is, but hold $30.
High.
Yeah, you hold 30. Take a poke, take a look at 31.50 perhaps, but that's it. That's hold 30. That's all I have to say about cars here. And 31.85 was your high on June 9th. So don't get super excited even if you do take out that 31.50, but below 30, look out below. L Brands, you got a sneaky seller at 23. He's out there, hit 23 the first time, and then he or she bot let it get over 23 again to 23.20. So there you go. There is your daily resistance. Blasted through.
You
22.
Still got this one, Joel?
We still got this.
Are you holding on to it?
I'll have to talk to the chief investment officer.
You get to 25. This stock has got huge resistance at 25. It was a big level for it back in 2019, finally took it out. It went back up early 2020, kissed that level, and then COVID hit and it sank. It gets anywhere near 25. I think it's a nice short setup. Yeah. I absolutely hate the stock, just from a long perspective. So I'm going to talk completely against your book here. I mean, this is mall-based, Victoria's Secrets. This is everything that I do not want to own in a company. So I'm
So women aren't going to be wearing
Joel,
bras and underwear.
I'd be getting the hell out of this.
Okay.
I want to go into your account and sell it for you. That's how much I
You've
hate
never
this
said
stock.
that before.
I want to go into your account, log in, and sell it for you, Joel. This is a gift. It's up 20% here this morning. I think it has the possibility, if you want to be greedy, to get to 25. I don't think anyway how it's getting through 25 anytime soon. I think there's going to be a wall of resistance there. I'm not even sure it doesn't give some of this back already today. Up 20% on cost-cutting efforts is not the reason to own a stock.
All right.
Hate it.
I'm seeing
hated it.
I'm seeing 9% short float in L Brands and 22% in Avis Budget. So.
Dennis, you are either love something today or you hate it today.
I hate being on the fence.
You're not on the fence, man.
You know what? I watch this, segments on Mad Money, and these technical analysts come on and they say, silver's gonna go up, but if this happens, it's gonna go down. And they're like, okay, it's going to go up 10% if the dollar does this. But if the dollar does this, it's going to go down 10%. And I'm like, so is it going up 10% or down 10%? If I don't want to make a call on something, don't make a call. But don't say it's going to go up 10% and down 10%, because then you can't be wrong. Make a call. Get off the fence. You want to talk about a stock, that's why I say no comment. I'm not making a trade. I don't know how to call it. Say that then. But don't cover your ass and say, oh, it's going to go up and it's going to go down. Make a call.
You got in a Twitter spat with somebody over that.
She blocked me. It was Carolyn Broden. And
she
blocked
and they were on
you? There. It was the same thing. The Fibonacci cream. And she's fine. I have no problem with her. But her analysis was not fine. Her analysis was, it's going to go up if it does this. It's going to go down if it does this. You're saying it's going to go up and it's going to go down. Well, get off the fence and make a call. I don't like analysis that covers both ways. And then you say, oh, yeah, I was right because it went up. Or, oh, yeah, I was right because it went down because you said both. That's my opinion.
I have a call I want to make on eBay here. It's going to go up or it's going to go down.
Good call, Spencer.
Thanks.
Good call.
It's going down.
If it stays flat, you're really in the shitter, though, because it's really
Dennis, now you're swearing again. I know,
Jason has loosened up the reins.
Yeah. Wait till the SEC or the what is it called?
Okay, I think.
The FCC. eBay. But in all seriousness, I really don't know why eBay is down this morning. Their earnings beat, their sales beat, and they raised their guidance for the quarter and for the year. So go figure. I don't know. But eBay,
it's run. It's run and run and run. I mean, this stock has been one of the
most incredible.
This has got to be the biggest run in a quarter that eBay has had in decades. I'm not sure. eBay's doubled. It's doubled since the lows in April. More than doubled. So it has just been on the most incredible run ever. So the bar was set very, very high. Where Shopify got over the very, very high bar, this definitely did not get over the very, very high bar. Beating by 2 cents, $1.08 versus $1.06, and beating 2.87 billion versus 2.8 billion is a slight beat. A slight beat on a stock that is up over 100% from where it was in April.
Gotta do better
than
that.
That is exactly why the stock is trading down here this morning.
Yeah, it's traded down $1.38. Someone really whacked it down to 52.50, and the buy the dippers came in. Now that it's back up at 55, that just gives me like the feeling like, hey, that pre-market low is going to hold up at least for today. Now that you're $2.50 away, looking at the ranges, like to look at the ranges from the last 2 days. Man. 56.11 is the low from yesterday. 56.35 close. I think you're going to have a hard time getting up to that area, but I'm sure a lot of people like to see this back near the 56 area. If you start to go into retreat and you don't get to 52.50, even right now, as we're speaking, your next daily low is coming in at 53.55. That's $1.50 away. So that's your first support level. Let's call the range in this today, 53.55. I don't think you'll see that 56, maybe 55.5.
5 minutes here until we're going to be joined by Michael Sonnenshein from Grayscale. But let's do Spotify here. Their active users grew, but so did their losses, which is interesting. Monthly active users up 29% on a year-over-year basis. I'll give you the the earnings, and I'll give it the sales first. Sale just under 2 billion. That's euros because it's a European company.
Yeah.
And their losses also grew on a year-over-year basis. They lost I don't know how to say it, $1.91, but I guess it's euros. So 1.91 euros per share versus a loss a year ago of 0.42 euros per share. So their losses are growing with their subscribers.
It'll be a Forex major to figure all that out. Anyway, yeah. Spotify down $11 here. I'm just going to say, I don't even look at the numbers. This had a high bar too. See eBay, see Shopify. Shopify blows it away. This doesn't sound like it's blown away. It looks like eBay to me, where there was a lot of high expectations here, and the quarter was fine, but it wasn't fine enough. It's concerning a little bit. I like Spotify. We have the product. We pay them, like, we're on the family plan. I think it's like $15 a month. And we have like 4 accounts or whatever, which is awesome. I mean, I like Spotify. I love the product. And I actually would be a buyer of this on a significant pullback. I've played it a couple times. We know from the long side. I screwed up and missed the breakout from 200 to 300, but I played it a couple times.
Oh, look at that.
It stopped
right at 300.
It stopped right on the kisser at 300. So that's just such a significant number to actually go. And it obviously didn't get there, 299.67. We'll call it 300. That's major resistance still. I think there's enough love here. You know where? If it got down near that 243 low of the move, I think you find some good buyers down there. So as opposed to bad buyers, I guess. But yeah, I think you find some buyers down there at 243. I don't know if we're going to get down there today. If we did, I might take a shot.
Early range 252. You spiked down there on the initial number, rallied back to 260, and then went back to 252. So there's bids there. That's almost $4 away. Right now, this swing area would be 256. Last 3 15-minute bracket, you hit 256. Someone trying to peel out there, get a little move above that. Longer term, boy, this is tough. I think I'd be more interested in this longer term if you got into the lower 240s. I see a daily low not too long ago.
Like Milo, I just said
243. Yeah, 243.11. So I don't know, kind of not telling you a lot. They hit it hard, and early range is early trade.
Middle of nowhere at 257, no trade. Get down to 243, I might be interested.
I agree.
Next.
Let's do the industrials together. Boeing and GE. GE out this morning, 15-cent loss versus a 10-cent loss estimate. So that missed. Revenue did beat $17.75 billion versus $17.12 billion estimate. Boeing, same story. Missed badly, actually, on their earnings per share. Missed horribly. Sales actually also missed. So the Boeing was a little bit worse. They missed and they missed. They lost $4.75 per share last quarter. Supposed to lose around $2.50 a share. Sales just under $12 billion versus a $13 billion estimate. They also formally announced the end of the 747 program. We knew that was going to happen already. And they're delaying the ramp up of their 737 production. A lot of bad headlines here. Story is GE mixed, Boeing bad miss.
It's on Boeing and GE. You're right. We can kind of do them together. They both obviously, GE is, obviously a part supplier for Boeing and for the Max as well. It's a story like L brands, like car. Like a lot of this is like, okay, throw the kitchen sink quarter, the bad quarter. Now that it's past us, do we start to see some buyers emerge saying, okay, now we got all the bad news and it's over? I don't know if the Boeing story has all the bad news in it, but I can tell you've got some good support at 167. So we came down here back in June. We tested the last couple of days, 168, 169. Call this whole area 167 to 170. Major, major, major support. So as long as you're holding 167, you got my permission to try from the long side. But if it takes out the 167 low, get the hell out. So I would say if you're buying at 171, 172, 170 today, that's your clearly defined out 167. Below 167, I want no part of it. But for the traders out there, there is some clear support down here.
And there's clear resistance on the pre-market trading. I call it 174.50. That's a pre-market high. The first run up to there went to 74.30 and then 174.50. I just don't know why they're building planes. No one's buying them. And I hear they're canceling orders. GE, Show you can hold $7 here. That was resistance. It broke out. It came back. So as long as you hold 7, you got up to 720.
A little double bottom yesterday, Joel. G.
Yeah,
oh, that's
you do.
good.
G does that.
669.
Yeah. So there's
you got major support down there at 670. So you're both on support. There is some support in here, a little bit off it because both stocks are lifting slightly this morning. But if they were to pull back, I think you do have some buyers, some people who think, we're getting closer to a vaccine and the story could eventually turn around here. I'm not putting it either in my long-term portfolio just because, like you said on the Boeing story, I mean, the biggest customers are in major problems right now. So yes, the government is a customer of Boeing as well, but we know they sell a lot of airplanes to UAL and to Delta and to Southwest, and it's going to be a tough road to hoe for a while. So what happens, and a year from now, maybe we're past this, maybe we got a vaccine, maybe everybody goes back to their normal way of life, but it's a long way to get there, and it's hard to see the light at the end of the tunnel yet. All right, so short-term trade, long-term investment, no thank you.
That fourth member of our party here is our first guest of the day, Michael Sonnenshein. He is a managing director at Grayscale Investments, the firm behind the Bitcoin Trust, the Ethereum Trust, and other crypto assets. Michael, good morning.
Hey, good morning. Great to be here, guys.
What timing to have you on here? What is going on with Bitcoin in the last couple of days?
Well, we have seen this, and I've been in the space now almost 7 years. And when Bitcoin and the digital asset market in general goes through these periods of time where there's low volatility and prices are relatively range bound, you do start to see those precursors of it seeing a big move in price, sometimes to the upside, sometimes to the downside. And so Bitcoin, if you guys have been watching on the charts, has been relatively range bound for a lot of this year. It did have that massive deleveraging and massive sell-off in March when really everything sold off. But other than that, it's really recovered in a really resilient way and has been kind of range bound in that $8,000, $9,000, $10,000 range, and it's now broken out above 11,000.
Are you surprised at how Bitcoin, crypto at large, the way it's traded with the rest of the market? This year we got the first real test, the first real bout of volatility to really test out, okay, well, how will crypto correlate with the overall market that's in a free fall? And now we know the answer to that question. It correlated stronger than I thought, at least. Are you surprised at how the asset has traded with the overall market here this year?
We're actually not. I don't think that there could be a better setup for a world in which digital currencies make sense. And that's really what our investors are telling us these days. In a world of unlimited quantitative easing and all of this fiscal policy intervention, looking to verifiably scarce assets like Bitcoin is something that is really resonating with investors. And so, yes, of course, you've seen these assets sell off the way that a lot of other assets did, but Bitcoin's up now over 50% year to date. So it's rebounded even stronger than a lot of other markets and a lot of other assets. And that's not something that investors are taking lightly. In fact, we've seen the acceleration of inflows into our products at record-breaking pace. We've brought in about $1.5 billion of new assets so far in 2020.
And are they through private placements? How have you been taking in these assets and deploying them?
So all of our inflows are coming in through the private placement. So we're talking about 80 some odd % of that coming from institutional investors, a lot of that being hedge funds. And we've actually not only seen a lot of interest in Bitcoin, which has always been generally investors' first foray into the asset class, but now over, I think it's about 40% of Grayscale's investors are invested in more than one product. So we're seeing this big trend towards diversification within the asset class as well, and seeing investors allocate to other assets like Ethereum, Bitcoin Cash, et cetera.
What about, is it just, like you just mentioned that, what are some of the other cryptocurrencies that are attracting interest? I mean, you have, Ethereum, you have a couple other ones. What else is attracting investors' interest?
Well, so I think what we're seeing is a lot of investors often saying they want exposure to the asset class, but they're not sure if maybe they missed Bitcoin or maybe they missed Ethereum, or they're not sure how to pick winners and avoid losers. And so we've been seeing a lot of interest in the Grayscale Digital Large Cap Fund, which is a diversified basket of digital currencies, which trades under the symbol GDLC. And so a lot of investors have been looking to that to make a single investment, but then get broad-based exposure to the asset class.
And is it more people that are already in it, institutions that are in it, deploying more of their assets, or are you finding a lot of new money coming into the market?
No, I think since digital currencies still exist outside of the areas where investors, institutional or not, it doesn't exist in areas where they buy stocks and bonds and commodities. Digital currencies are still in an ecosystem of their own. And so generally speaking, the investors leveraging Grayscale products are doing so because the products offer access and offer exposure through a security. So it lets them get into the asset class without them having to buy and hold and figure out safekeeping of digital currencies directly. And instead, they can buy something that looks and feels like their other investments.
Michael, Dennis Dick here, and I think a lot of people have this question, and I just want to clarify it for our listeners. How is GBTC structured different than an ETF? Because we know the SEC has not approved a Bitcoin ETF yet. You guys are out there, so obviously your structure is different. How are you different than an ETF?
So Grayscale Bitcoin Trust is a long-only passive Bitcoin strategy. It is publicly traded on the OTCQX market. It trades under symbol GBTC. The product does not have redemptions, which is something you would see in an ETF. And it does not trade on a national exchange. It trades on the OTCQX market, where you see a lot of ADRs like Roche and Adidas and other foreign companies trade. One thing that is really important to note about Grayscale Bitcoin Trust is that it did become the first and is the only SEC reporting company that is a digital currency investment product earlier this year. So to be clear, it is not an ETF, and some of those big distinctions are the lack of a redemption program and also the fact that it does not trade on a national exchange.
Do you see an ETF eventually getting approved, and what would that competition mean for Grayscale?
So I think an ETF is really a matter of when, not a matter of if. I think the regulatory community around digital assets has been very, very active. And I think Grayscale is certainly something that the market should be digesting as, hey, there are ways to create products around digital currencies within the existing legislative framework. But our regulators are still looking for there to be a couple more improvements in the maturity around digital assets, surveillance sharing agreements, and other things that they've seen for other assets. And over time, the market will mature and that will become a reality. But we're not there just yet.
Michael, how does the lack of the creation and redemption process, how does that affect the price of GBTC as it relates to Bitcoin? Because we know that functionality, that creation redemption system, that's what keeps ETFs in line with their NAV. So without that, how does GBTC how does the price move around the price of Bitcoin?
Well, so GBTC has consistently been trading at a premium to its net asset value, dating all the way back to May of 2015 when it started trading. So it's important to note that Grayscale does not trade in the secondary market. We don't control the price at which the product trades on a daily basis. It's really a function of market forces. And I think investors should be taking away that if there's that much demand for access and exposure to Bitcoin through a security, then clearly this is an investment theme that is resonating with folks and something they want to have as part of building out their portfolios.
All right, and I have a question here from our chat. It's actually a two-parter. This is from Coin Collector. I don't know what coins he's collecting, but I'm assuming it's Bitcoin. He asked us to ask you where you think Bitcoin will be in the next year, and we'll answer that, and then I have a follow-up.
So I won't make any price predictions on Bitcoin. I have been in the space, as I said, for about 7 years, and I've seen all kinds of environments around this asset class. What I can say to the person who asked that question is look out for certain signs and signals around the asset class. Look at the human capital that's working in the space. Look at the companies getting involved in the space. Look at trading volumes. Look at the maturity of the derivatives market, the lending and borrowing market, all the tools that investors want to see around this nascent asset class. But I think the prospects for the asset class continue to be very bright, but certainly not necessarily sure that that's reflected in price now or would be a year from now.
And do you see Bitcoin miners? Is that to you a viable alternative investment potentially to get exposure?
Well, so the mining landscape is changing quite rapidly. We're seeing the development of some really world-class mining operations popping up all over the world. And while a lot of that mining has been concentrated overseas, primarily in Asia, we're seeing a lot more mining popping up in Europe and in North America. So certainly going to be an increasingly competitive market, but also these are, companies that play a really important role in the ecosystem.
Michael, just want to ask you real quickly, last time, Bitcoin got off the mat, had a major run, a lot of stocks associated with it made a run too. You're not really seeing it this time. I don't know if you want to, make any comments on any individual stocks, right? Blockchain. I don't know what the other ones are out there. I mean, do you see that as, something good, that there's not just rampant speculation in these other stocks? Or do you think that there's some stocks? I mean, wasn't IBM supposed to be getting into blockchain? Are there any big companies getting in that perhaps, give more validation to the cryptocurrencies?
Well, I think certainly what we've seen recently are a couple of really notable investors very publicly getting themselves involved in the asset class. So you have the likes of Paul Tudor Jones, Renaissance Technologies amending their, investment mandates to allow for investment in Bitcoin. You've seen banks like JP Morgan coming out and publicly saying that they're extending banking services to certain digital currency related businesses. These are kind of those signs and signals that we want to see happening around the ecosystem and around having it be more and more mature. I think in other market environments, we've certainly seen investors get excited about chip makers and other companies whose businesses are a little bit more directly tied to developing and maintaining the digital currency ecosystem. But I personally don't have a strong view on any one of those, because I also think we're dealing with a totally new market paradigm and obviously very, very different market conditions.
Michael Sonnenshein is a board member and managing director at Grayscale Investments. Michael, we appreciate your time today. Thanks a lot.
Thank you, guys. Take care.
All right. 8:47 here, about 12 minutes left in the hour, 12 minutes until we're joined by our next guest, the founder and CEO of Hyliion. Please remember to like the video, subscribe. We appreciate that. Let's go back to the earnings parade, guys. Do you have any preference where you want to go? Or I can just throw us some tickers.
Let's go to ticker time.
Let's start with Visa here. They had earnings, and they're on my list here. So they had earnings after the close yesterday, beat on their EPS, missed on their sales figure.
I own MasterCard. Somebody's asked me if I'd buy the dip in Visa. No, because I own MasterCard, and these two stocks pair so well together. I mean, you look at the charts and stick them on top of each other, and they're virtually identical. So if you own Visa, you own MasterCard. Obviously, MasterCard's moving down a little bit in sympathy as well. I own MasterCard, so if I didn't own Visa, would I be a buyer somewhere in there? Maybe 187, 188. But again, they've had big runs. So coming in here and saying, oh, I got to buy the 1% dip, it's not really a dip.
No, it's not. It's down 277. Popped a little bit, got up to over 199. Then they slammed it. It's made the new low, low in the pre-market trading, 192.25. Nothing's really standing out to me. I think a little bit more buying interest would come in here under 190. You had a low back at 187.18. I see a couple at 186, 187. I mean, even if you want to be more patient in this one, maybe get down to fill the gap. That was at the 184 area. So I don't know. It's within striking distance that pre-market low. I think it's got some work to do under 190.
Just a couple more tickers on my list, and then we'll get to some stuff in the chat. But as far as earnings, I wanted to look at FireEye, and I wanted to look at Aphria. Let's do Aphria first. They had earnings this morning. Pot has been really hot.
Yes.
The past couple of days, just heading into this report, I guess you could say that, but Aphria out this morning, sales up 18% on a year-over-year basis. I don't have their earnings per share in front of me, but the bottom line here, beyond just that headline, is that pot's been really hot.
Yeah,
whole sector for the past couple of days.
3-day, we had a 3-day breakout there. I mean, a little bit of this to do, and it's crazy, but 2 days ago, Fast Money, Tim Seymour was really pumping the pot stocks, and they started to lift on that, and it just has continued. Now, I'm not saying he was the entire catalyst for the move, but it doesn't hurt, when you got a couple 100,000 people watching and, all of a sudden they say, no, this is the turning event for pot. Like he was very, very bullish commentary. And I watched CGC on his comments go up about 3.5%. That was 2 days ago. So sometimes they can turn just on, speculator commentary from fast money. And that helped. That helped to keep it going. It's a big move now. If you're coming in like a CGC, Aphria is getting me a pullback here, so maybe that's a different story. But, CGC, if I'm just looking at that, and I've always looked at that as kind of the leader of the group, $16, it's went up to almost 20 yesterday. You pull back in the 18 area, it gets interesting from a technical basis. Again, remember, a lot of these companies, are still trading at ridiculous nosebleed multiples, relative to the competition that is coming for them. But they've come down a long ways as well. I mean, you think about Aphria, used to be a $20 stock, and it got down to $2. So, at a certain point in time, these stocks can maybe, start to make some sense from a valuation perspective. But from a technical perspective, I wouldn't be surprised if Aphria, APHA, gets bought near the $5 area. And I think you already saw it in the pre-market.
Yeah.
Because you broke out. So you're coming back to the area of the breakout. A lot of times that old resistance becomes new support. So I think in the low fives, I think some people will take a shot on Aphria. So I wouldn't be surprised if the dip gets bought.
Yeah, and just after that run up over the last 2 days, I think people, that were short or people that shorted into that, I think that's a little bit of a gift here. And as you can see, it hit 520, bounced pretty hard off that, gotten in that same region. You have a daily low at 519. The previous day's high was 511. So I like that whole area too. Coming back on the upside, boy, people like to see $6. What was the close? The close was $6 even. 586 was your low. That will fill the gap. So looking at resistance at that close from the high up to the close, 586 to $6.
I should also mention that Scott's Miracle-Gro had earnings this morning. Not only did they beat, but they announced a special dividend of $5 per share, and they raised their guidance.
The old special $5 dividend trick, Dennis.
Who's did this?
This is Scott Miracle-Gro, SMG.
So they're doing a $5 special divvy?
Yep, on top of an earnings beat and a guidance raise.
Unbelievable, this stock, and I'm so mad at myself. I bought this stock as, I bought the stock back, I think around like 80 or I think it was $75 back in 2019, and I watched it go down to 60 on me. And I'm like, man, and this was back when pot was still kind of hot. And I'm like, this is kind of a play on everything, just a play on farming altogether. And then it started to come back, and it made the ridiculous run. It got up to like $100, and I was like, okay, it's starting to get overdone. I sold it. And now it's 162. And again, maybe, when you're just buying companies at good valuations and you're buying good, strong companies, you got to buy them and forget that you own them. And I always get into this trouble where once I take heat on something, in the long-term investment account, and then it starts to come back and show life again, you get that like, I took so much heat, now I'm up in it, maybe I should just get out, and then that's when the trade really starts working for you. So I screwed this one up, selling this at whatever I sold it at, $100 or $95, 162 here now. It's been an incredible company.
Wow.
It's at an all-time high. Rule of thumb, remember golden rule, don't short stocks, making new all-time highs. It's up 11%. I'm not chasing it here, but on pullbacks, Scott's Miracle-Gro has been awesome. $150 if it was ever to pull back there would be major support now.
Yeah, I mean, you're getting a print here, 162.70. Your last print at 162.49. 7,000 shares have traded up there. So what's that? Let me see the daily volume on this thing. Is that anything significant? Does this trade a lot of volume? I bet just over $1 million or.
No, it's light volume, that Joel.
No, so it only trades 350,000. It traded 350 yesterday. Keep an eye on that pre-market high. That's all I can say. Get above that. You just keep on running. No idea where to buy this on a pullback for a day trade.
It's a good point you're making. You got to look at that volume sometime. Only 7,000 shares have traded. So you can say price discovery is still going to be mainly at the open on this. So it could go anywhere. So don't kid yourself. We saw Sherwin-Williams yesterday report a fabulous quarter. Stock was trading up, and had great numbers. And stock traded up and opened up at like 655. And within 10 minutes went red. Did you see that move? And
that was quick. Yeah, those high price. It got about a buck or two below yesterday's low. I mean, it came right into that area. Kodak's still ripping here, folks. $20 maybe, up 784.
Who
Big
knows? Go anywhere.
Look at this thing. 27 million shares of trading, and
Robinhood's got a hold of it too now. You got the algos in there. You got Robinhood in it. Everybody's talking about it. You know, half the people on Twitter are talking about this right now. It's been an incredible move. Trump talked about it. And when Trump mentions a stock specifically, it's going to get some love, and especially a stock, you know, that's, you know, been out of favor for a long time. You're squeezing people. You're squeezing shorts up another 100% here today. It can go anywhere. This is a no touch for me. This kind of stuff, I'm going to say it again. Everybody who starts trading is naturally attracted to this. I'm telling you, I've dealt with traders for 20 years, been prop. Every trader that starts trading, I started trading penny stocks when I started trading. When you start trading, you're attracted to where can I make money fast? Where can I get rich fast? The fast money. They got to show fast money. They want to get rich fast. That's what people do. That's what people want to do. They want to get rich fast. I'm telling you, the way to be successful, if you're looking, you know, and you just want to dabble and you want to have some fun, you want some casino money, go trade Kodak. If you want to just go to the casino and put it on red or black on the roulette wheel. But this stuff is the hardest stuff to trade. It's wild. It could be, you could buy it at 16 and be at 13 on you. You could short at 16 and it could be at 20 on you. Nobody knows where this is going to go. Nobody in the whole world knows where the stock is going to go. All I'm saying is that when the dust settles and you get all this algo action out there, then it'll start to leak eventually. I don't know where that happens though.
No.
Shorting on day one is suicide. You're shorting, this is day two. It's still suicide. It's about another 100% on a Trump pump. You can't come in here on the first day and just say, you know, this is going to be the top or this is going to be the turnaround story. But if you're coming in putting real hard investment dollars into it at this point, I think you're on the wrong side. Because I think when you look at it 6 months from now, I think the story will cool off, and I think it'll be back down under $5. So the way I've been successful in this business is I trade more boring stocks, and we know I'm attracted to boring. I trade General Electric. You know, if I'm looking at the stocks, Goldman Sachs, you know, the banks, you know,
not too boring.
The food stock. I trade all the boring stuff. Why do I do that? Because it's more predictable. I'm trading what is predictable. What is, you know, what was happened before. There's relationships. What's your relationship with Kodak? What would you pair up with Kodak? You can't do any of that. There's no relationship to anything here. It's just going wild. It's trading on Momo. It's trading on momentum. It's trading algorithmic. Look how fast it's trading.
I know.
So it's very, very difficult. So the point being, and I'm going on a rant here. The point being, I know you want to cut me off, but I want to make a clear point here. The point is, if you are new to trading and you want to just, you know, throw all your money in this is the hardest stuff to trade. The people who are going to be in this business for 15, 20, 30 years are the people who realize that boring makes money. Boring is the way to go because it is more predictable. All of my trades, if you watch me trade, yeah, I'm doing 50 stocks or 100 stocks, but you know how I control them all? Because they're all boring. I can't, that's why I say I don't trade Tesla, because I have to babysit that stock. I can't have 50 overnight positions on and have Tesla on and it's flying around. I'm trying to babysit this and now I'm neglecting the other 49. If you have like 50 positions on, you need to be watching those. So they have to be more boring to be able to manage them all. So I cannot trade something like this. If I was bored and I just want to have some fun, sure, this is fun money. But to think you're going to turn around and get rich trading Kodak, 99% of people are going to go broke trading Kodak.
I think we got a new person in here, Graphlix, and the way he played it, or she played it, or Animal played it with a straddle. I mean, that's not a bad, if you feel like you have to get involved in something like that after it makes a move and you're like, okay, it might be going to 16, but it could go right back to 8. I mean, I'm sure you know the premiums were juiced in it. Like, I don't know if I'd be
crazy, Joel.
Well, yesterday they were probably crazy, but today they're probably absolutely out of this world. But that you know, that's not a bad way with, you know, because you hear, oh, the big option trades, this, that, or anything, you know, especially after consolidation periods and, you know, the way of playing. I just wanted to point that out.
I don't think even anyway, the option premium
not on this one now
so much on this. It's going to be hard to play it anyway. Like I just think this trade 20, it's so crazy. Like you're fighting algorithms, you're fighting the craze, you're fighting everything. Very, very difficult stock to trade. That's my point.
just keep an eye. Yeah. No, great advice.
It's a fun story to talk about. It's fun to talk
especially
about.
with the stuff that happened.
Yeah, it's fun to talk
Eastman
about.
Kodak.
But it's not
I mean,
my moneymaker. I'm not going in and getting rich trading Kodak. And I'm sure there's some good traders out there that can trade this kind of stuff, but those are very exceptional people. Like Investors Underground, Nate over there. He's good at this kind of stuff. There's certain people who are very good at this kind of stuff, but they're again, the people who are getting in it, the smart money. With those Twitter people on Monday.
Oh yeah.
That like discovered the story, which is public information. That Eric person, that's just smart. That's just doing due diligence. That's just smart. And obviously, getting ahead of the story. And they've ring the register. They probably already ring the register if you're in it. But unbelievable. That's, the safer way. Trading something before the train has left the station. This isn't train leaving the station. This is rocket ship that's been blown up into the sky. It's trading the stratosphere right now. And we're just waiting. We don't know when it's going to come back to Earth or how high it's going to go, but we know eventually it's coming back to Earth. That's a hard thing to call. Where's the rocket ship stop? I don't know.
All right, that's enough Kodak for like the next 3 years. We'll talk about them in 2023. I'm so excited for this next guest that I actually woke up at 3 a.m. today. That's not even a joke.
Oh, jeez.
Thomas Healy is the founder and CEO of Hyliion. He joins us now. Thomas, good morning.
Hey, good morning. Thanks for having me on.
Okay, a lot I want to get to here. So let's just start off with this. You guys announced the reverse IPO with a Tortoise acquisition a few months ago. That's going to close in September. Explain what you're doing. How is it different than what Tesla and Nikola is doing? Because you're in the same field, but you're going about it differently. So explain how you're going about electric trucks that's different than Nikola and Tesla.
Yeah, no, you hit the nail on the head. I mean, we're all focused on electrification, right? And bringing electrified powertrains to the commercial vehicle space. But the difference is, how do we generate the electricity to actually drive the vehicles? So with Tesla, they're using the grid to recharge their truck, right? With Nikola, they're using a hydrogen fuel cell solution. With our truck, what we're doing is we're actually leveraging natural gas and using that to produce electricity locally on the truck to actually charge the batteries up. And, there's kind of three differences when you look at these solutions. You got to look at what's the total cost of ownership, what's going to be the emissions levels from those vehicles, and how much infrastructure is out there to recharge them. And that's what fleets are going to really care about when they decide what trucks they're going to go with.
So you're using renewable natural gas and compressed natural gas, and you're also not just building your own trucks, you also are building your own powertrain system that essentially goes onto existing trucks that essentially any truck can use, more or less. So you don't have to build your own fleet to make any money.
Yeah, exactly. So the way we're approaching it is we're focused on the powertrain of the vehicle, right? So very similar to what Cummins does, right? When you go buy a brand new Freightliner truck, you can spec it with a Detroit engine, a Cummins engine. Well, Hyliion is another powertrain provider. And so we're actually working with the existing truck OEMs like the Volvos, the Peterbilts, the Freightliners, and putting our powertrain in those vehicles, as opposed to taking the approach of, hey, let's do a total clean sheet design of the entire truck, which we viewed it as, the area for evolution in the trucking industry right now is really in the powertrain, right? We need to bring electric technology forward. And we figured, the trucks that the OEMs already make today are great, right? I mean, they have a lot of great features. They're already tested. They've gone through, safety validation, crash testing. And the thing that we can come in and do is bring a new powertrain to reduce the total cost of ownership and save in emissions.
So you're relying on natural gas instead of the grid or hydrogen fuel cells, but there's a reason that natural gas hasn't caught on, right? It's because it's not as efficient. So how do you get around that?
Yeah, so natural gas is not a new fuel source, right? You can actually still go buy conventional natural gas trucks today. The problem with those trucks is they're significantly underpowered compared to a diesel truck. We actually we took one of them and put it on a dyno, and it was producing about 260 horsepower at the rear wheels, right? So when you compare that to a diesel, it's significantly underpowered. And so there's always been a resistance from fleets and from drivers to moving to natural gas because the vehicles don't perform as well. And so, what happened though a handful of years ago is, natural gas was thought to be this fuel of the future for the trucking industry. But when fleets started adopting it, they started running into some of those issues. But the benefit that we have is the infrastructure got built out during that time. There's over 700 natural gas stations already out there across the US. And so what we're doing is we're looking at it and saying, hey, there's a ton of benefits of natural gas. It's an extremely low cost fuel solution. You can be in about a dollar per diesel gallon equivalent, right now with the cost of natural gas fueling. There's the existing infrastructure out there, and there's with that renewable natural gas, you can have a net carbon negative emissions profile. So let's take all of those benefits, but overcome that underpowered and underperforming vehicle by using an electric powertrain, which has way more horsepower and torque than even a conventional diesel truck does.
So the fact that the infrastructure already exists means you don't have to build out your own infrastructure. Unlike electric charging stations or hydrogen fuel cell stations, you don't have to build out your own infrastructure. It's already there.
Exactly. And infrastructure, I think, is going to be one of our biggest challenges as, the industry tries to shift towards electrification. Infrastructure is the big question mark right now, right? I mean, it's costly. I mean, we had one fleet tell us, they went and got quoted for moving their whole distribution center over to fully electric semi trucks, and they got quoted $30 million by their utility to put in rechargers. And so, and not only that, we had another fleet tell us that they went to the utility and that they gave us a story. They were like, look, the utility provider laughed at me when I handed over the spec sheet because there's not that much electricity available, right? Electric trucks consume a tremendous amount of electricity. There's a study out there that shows, plugging in 2 semi trucks to charge off the grid is equivalent to the amount of electricity consumed by an entire truck manufacturing plant, right? So it's a huge burden on the grid, and so that's where us having the ability to just tap into a refueling network that's already out there just really accelerates the business plan of what we're going after.
So who are you sort of mentioned it, but can you talk about some of the deals you have with companies? How many deals do you have with companies for your powertrain technology, I guess, if you want to call it that? How many deals do you have, and how many people, what is the demand like for your product?
Yeah, so stepping back a little bit, there's actually 2 products that we're bringing to market. We've been talking about the Hypertruck ERX, which is a technology that we're going to start delivering to fleets next year in 2021. But we also have a second product that's a hybrid electric product that's really a add-on to existing trucks. You can get it put on your new truck or as a retrofit. And that technology, we've already started rolling it out in low volumes, but some of the large fleets like Penske and Ryder, Ideal Lease, CR England are already running that technology. And so, we've already started building some of those really strong fleet relations, as well as kind of those learnings of how do you roll out a solution to this market. But then, we're kind of coupling that into being able to deliver the Hypertruck ERX next year. And the one, announcement we've had on fleet engagements on that side is Agility Global Logistics, which is one of the leading logistics provider worldwide. They've come in and placed a 1,000-unit pre-order for our Hypertruck solution. And so we're going to start delivering vehicles to Agility next year, and then continue on in the years ahead with fulfilling that full order. And what's really exciting to us is Agility has truly a global footprint. So not only are we going to work together on deploying the technology here in North America, but also overseas, which as you look at kind of the landscape here, emission savings opportunities overseas and using clean fuel sources is actually in some ways even a stronger opportunity than it is here in the US.
Joel, you're on mute there. The old mute trick.
First of all, we are on the line here with Thomas Healy. He's the founder and CEO of Hyliion. Just wanted to ask you, you said the conversation with Tortoise started pre-COVID. Why go public via SPAC right now?
Yeah, so earlier this year, we had kicked off kind of our financing process, right? We knew we were going to go out and do the next round. We looked at keeping it public or going public, keeping it private. We decided that going the public path made the most sense. And then as we looked at kind of the conventional IPO path versus the SPAC path, the SPAC path had a lot of benefits. It was a faster process. We met with the Tortoise team just before COVID lockdown really happened. And there's a lot of synergies there. The team had viewed a lot of the kind of problems of moving towards electric the same way. The opportunities of leveraging existing fueling stations and leveraging natural gas, and renewable natural gas is kind of one of these things that a lot of people don't know about, right? It's a great fuel source that's fantastic for our environment, but it's not spoken about all that much. And so we saw a lot of synergies on that side, and we saw it as a way where we could do this transaction and fully fund our business model, right? That was one of the big benefits of it. With the capital that we're bringing in, it puts us in a position where we don't have to go out and raise additional cash in order to fulfill this business model.
And how has COVID impacted your timeline and projections?
Yeah, there's been a slight delay in things, but it hasn't been a huge impact. Thankfully, we've been able to keep our facility still running here in Austin, Texas, with still moving a significant amount of the workforce to remote during this time, though. But the biggest impact we saw is some of the OEMs shut down their manufacturing plants, and so we had scheduled deliveries that ultimately got pushed out a little bit just because the trucks weren't built yet. But now we're seeing kind of the influx of, those trucks are being built and they're getting delivered, and we're installing our hybrid system on them. So ultimately, all the projections that we've put out there, we still see as being on track and still very achievable, even with all that's going on with COVID.
So you had announced that the reverse merger will be completed sometime at the end of this quarter, Q3. Is that still the case? You still on track for that?
Yeah, it is. So what I can kind of talk about is, a few weeks ago, we filed the proxy, right? It's kind of going through the SEC review period right now. We expect to get comments at some point in the near future. We'll respond to those, and then still on track to get this all wrapped up by the end of Q3. And, so that's kind of the timeline we're on right now.
And you're in Austin, Texas, which is notable because now you have a new neighbor. Elon Musk is your new neighbor. So what was your reaction when you heard that Tesla was opening a gigafactory in your neck of the woods?
Personally, I actually think it's a really positive thing, right? I think we've always viewed California as kind of the hub for electrification, right? And I think with this move from Tesla, it kind of positions Austin as being kind of another hub for electrified vehicles. And so from our standpoint, we're excited about it. We're excited to have more people focused on the same mission, the same goal in the area. And I think there's a lot of benefits of just building businesses here in Texas, and we're excited to be here and have others joining us.
And last one here, Thomas, an investment in Hyliion, is that like an investment? Is that a way to express a point of view in natural gas, electrification, all of the above, freight? How would you explain what an investment in your company, what point of view that expresses?
Yeah, it's an interesting question, and one that I think it expresses all those areas you spoke about, right? I mean, I wouldn't say it's just one, right? It's expressing an interest in this mega trend of moving towards electrification. It's expressing an interest in being able to have net carbon negative vehicles out on the road. So a huge advantage for the environment. I wouldn't say it's just focusing on one of those. It's kind of this global trend towards cleaner and more efficient and less cost solutions that can make a more economical shipment of goods across our country.
Thomas Healy is the founder and CEO of Hyliion. Thomas, thank you so much for the time today.
Thanks for having me on. Appreciate it.
All right, that'll be a wrap. You can't say we didn't get around the industry, folks. We've spoke to, I think, 4 or 5 CEOs at electric vehicle companies in the last few weeks. So I think that's going to be a wrap on that industry for now. There are others out there.
Just Elon Musk. I mean, that's
Elon.
the only.
He's just Musk coming on.
He's the exception.
Yeah.
We're working on that one.
Come on, Spencer.
Working on that, but I hope you enjoyed that.
What's the next industry? Where are we going? Let's take some suggestions from the chat.
Our next interview with the CEO is next week. We've got the CEO of Chegg booked up for
nice. That's a good
Thursday.
one.
So
yeah, that's
education from home. We're going to talk about all that. That's with Andy Brown next week. So what I'm gonna do is I'm gonna have all these interviews cut up into one video, and we're gonna post them all later. But we've spoken to Hyliion, Hyliion, Workhorse, Electromechanica, Nikola. So we've gotten around the industry, folks. I hope you enjoyed it. Dennis, did you have thought? I didn't realize you were still here, honestly.
Yeah, I was listening.
Okay.
I let you run with it. You're better at the interviews. I talk over everybody. They say they don't want me interviewing because I talk over the guests.
No, that's not true. That's
we're just joking.
All right, any final thoughts, you guys, before we wrap it up?
1805. That's where Kodak got to. So,
okay. Rocket ships go higher.
Yeah. So
I don't know where they run out of fuel, but eventually they do.
No. So
if
you want to target, there it is, 1805. Pull back 70 cents
comments.
Off that. No
Pfizer, 500,000 to buy. Pfizer still looks like it eventually wants to try this $40 area. It's trying to get up there again. I'm long in the long-term account, but it's been on a hell of a run. It's very mixed today. I mean, we're up $1, but the imbalances are mixed. You're seeing some stocks trade higher, some stocks trade lower. Not everything's going higher here. So it's going to be a mixed market here again. Keep it on your leaders. Keep it on your tech stocks because the rotation is still happening. I mean, this market has been full of rotation for basically 3 months, and that continues where some stocks are up, some stocks are down because other stocks are up. If you're understanding the rotation and following it, there is money to make. Your leaders in tech have always been Amazon, Apple, and Tesla is still a leader in tech as well.
Yeah, keep your eye, though, on your tech stocks at noon as the big boys go to Congress to testify.
Yes. Don't forget that. And a Fed meeting Fed announcement at 2 o'clock.
We got news headlines coming today.
Fed at 2. We've got tech testimony at noon. So it's going to be a big day, plus more earnings after the close today. Just real quick, the list here. Qualcomm, PayPal. A lot going on here today. So with that said, that's going to be a wrap for us. There's info in the description of this video for our upcoming options bootcamp, as well as access to the Benzinga swag store on Shopify. Thanks to our guests today, Thomas Healy and Michael Sonnenshein. Thanks to all of you in our chats. You can always email us, give us any feedback, good, bad, or otherwise. PreMarket@benzinga.com. Don't forget to hit that like button, hit that subscribe button. We appreciate it very much. I'll find you if you don't. I'll know who doesn't, and I'll find you, and I'll know. So please remember, all the information from our show meant to be used as informational purposes, not for investing or trading advice. Everyone have a great rest of your day. Joel and I will be back at 3:40 Eastern time. Until then, stay safe out there, and good luck.